Time for Money Tuesday. Many of you might be looking for an effective financial strategy to begin the new year. Well, the Backdoor Roth IRA could be an option. Stuart Welch with the Welch Group joins us this morning to explain. Good to have you with us this morning.
Good morning, Mike.
So a Backdoor Roth IRA, and keep in mind, there are salary limitations on a normal or Roth IRA. And so you're looking at a way to actually, even circumvent that possibly.
Yeah, it's a pretty big number though. If you file jointly, it's $240,000 of income before they say you can no longer contribute. And for singles, it's $161,000. So it's a pretty big income. But people that are above that income can't do it. Here's a way to do it. And so the first thing you want to do is you can do a non-deductible IRA. There are no income limits.
Okay.
And once you get into that non-deductible IRA, then you can do a conversion. You can convert it to a Roth, and that's how you do the backdoor.
Which is perfectly legal.
It's perfectly legal.
Yeah.
It's something that the IRS keeps looking at, but they never have finally figured out a way. They haven't actually come up and blocked it.
All right, and for people who aren't familiar with a Roth IRA, talk about some of the advantages of that over a traditional IRA.
Yeah, so both IRA, a Roth and a traditional IRA, once the money's in there, it grows tax deferred. But with a Roth, when you start taking the money out at retirement, it is not subject to income tax. Now, you don't get a deduction going in, but you don't have to pay the taxes on the other side. The traditional IRA, it's kind of the opposite. You get a deduction going in, but when you start taking it out, it's subject to ordinary income taxes.
And you're required at some point to take a distribution, right?
You are, and with a Roth, you aren't required to take a distribution. It's a pretty big advantage. So ideally, when you reach retirement, you have money in a Roth IRA, a tax-deductible IRA like a 401k or something like that, and then a personal account. When you have those three accounts and you start drawing money out, you can really control income taxes in retirement, which is really a really cool thing.
And we should mention, we don't have enough time to cover it here, but if you're over those income limits or at least qualified to do this backdoor, you still want to go with a tax advisor, right?
Yeah, so this has actually got some wrinkles in it, so you definitely want a tax advisor. And I would add that if you're under those limits so that you can do either the traditional deductible IRA or the Roth, you do want to do that. We want to get started now. That's what's really important. Get your money working, but be sure and talk to your tax advisor.
So somebody out there, you're saying, hey, I don't make that kind of money, but this is still a way to build your financial future through a Roth IRA.
That's it.
Stuart Welch, appreciate it. Thank you.
Thank you, Mike.